Hello, good day, audience. Uh, this is your trainer Mustafa Mirchawala from Mirchawala's Hub of Accountancy. And today we are going to start accounting from very scratch, from the very zero level, right? Okay. Now, first of all, you might have studied the word organization. In real life, there are two types of sectors, two types of organization. One is what public sector organization, another one is private sector. What do you mean by public sector? Please see the screen. Public sector is owned and controlled by government. Public sector organizations are the organizations which are owned and controlled by the government. For example, if we talk about India, then Air India, their official airline is the entity controlled and owned by government, right? Similarly, if you talk about United States, so in United States there is American Airlines. So there are different organizations everywhere in the world which are owned and controlled by the government, owned and controlled by the government, right? Okay, let me write the example. Okay, and normally these these entities, these public sector organizations are a source of income for government as well. They are a source of income for government as well. Now you can think about more examples in your country. Wherever you are living, you can see many public sector organizations. For example, normally in many countries, railway is controlled and owned by government, right? Railway government earn through railway as well, right? Then, and as I told you, this is a source of income for government. Can you think of any other source of income for government? Can you think over it? Yes, taxation is one of the major source of income, is one of the major source of income for government. Okay, right? And I hope you have studied little bit about fiscal policy of government. What is fiscal policy? Where money comes from and where it goes to. For government, the major source of income is tax. And for government, there are some expenditures as well. For example, government spends on army, defense, government spends on education, government spends on construction, government spends on health of the people, right? Okay, so this is where money comes from and where it goes to, right? Now come to the topic. Public sector organization are the organization which are owned and controlled by the government. Now, the second type of organizations are private sector organization. Open your eyes, open your eyes. Private sector entities are entities which are owned and controlled by private individuals. Owned and controlled by private individuals. Okay. And there are three forms. Look at here. There are three forms of private sectors. Private sector exists in one of these forms. Number one, sole trader. Number one is sole trader. Sole means single trader. Sole trader means single trader, means one man owned business. One man owned business. Let me give you some advantages and disadvantages of sole trader. When you work as a single owner, as compared to partnership, you don't need consultation. You don't need to ask other partners. So in sole trader, you are the single owner. You don't need to consult. You don't need to consult other partners. So decision making is comparatively fast, right? And if you get any profit, 100% profit will be yours. But yes, on the other side, there are some disadvantages as well. If you have loss, you will have to book complete loss. You'll have to book complete loss, right? Okay. And as compared to partnership, you are the only guy, you are the only owner. So definitely a single person can't gather a lot of finance, can't gather a lot of money for investment, okay, as compared to partnership. Now, the second form is partnership. For partnership, minimum partners must be two. Obviously, if there is one guy sole trader, so minimum partners must be two, and maximum limit by law is 20. Okay, by law, the maximum limit is 20 partners, right? What are the advantages of partnership? Yes, as now there are more guys, so they all will bring their expertise to the business. They all will bring finance investment to the business, right? Okay, and if there is any loss, that loss will be paid by all of them. That loss will be divided. Not a single person won't bear all the loss, but it will be divided. That's a good thing. But on the other hand, there are some disadvantages as well. There are some disadvantages as well. What are the disadvantages? If you have any profit, that profit will be distributed, right? And the other thing is chances of conflict. There is a possibility, if there are three partners, they all have three of them have different mindsets. Okay, so one partner is saying that I want to go this way, the other saying this way. So there is a possibility of clash and all these things. So these are the disadvantages of partnership. Now, the third form is limited company. The third form is limited company. First of all, keep one thing in mind. Right now, I'm not teaching these form. I'm just giving you idea, just giving you a slight idea. The third form is limited company, limited company. Let me explain you the concept of limited company with reference to country. With reference to country, with reference to country. Now look at here, look at here. Listen. First of all, tell me country. For example, you are living in USA, you are living in India, you are living in UK, anywhere, anywhere. So if you are an American, so my question is, who are the real owners of the of America, United States of America? Who are the real owners of United States of America? Your first reply will be public, obviously. That if a guy is American, he says it's America belongs to me. If a guy is Indian, he says India belongs to me, right? So the public is the real owner of the country. Public is the real owner of the country. Now I'll ask the next question. The next question is, who controls that country? Who controls that country? So you remember the government controls the country. But yes, government is elected by public. Every in many countries, every 5 years there are elections. So public gives votes and they elect government, and yes, then government controls the whole country. I repeat. The owner of countries, who are the real owners of country? Public. Who are the real owners of country? Public, right? But who controls the country? Government. And government is appointed and elected by public, right? Public give votes every 5 years and they elect the government. Okay, now just compare it with look at here, the company. First, now the question is, who are the real owners of the company? Who are the real owners of the company? The real owners of the company are shareholders. The real owners of the company are shareholders. What do you mean by shareholders? Shareholders means whoever has the share of the company, he has the share in the ownership of the company. He has the share in the ownership of the company, right? So the real owners of the companies are shareholders. Now the next question, who controls the company? The control of the company is with Now the control of the company is with board of directors, and who elects board of directors? These shareholders elect board of directors in annual general meeting, right? So whenever you want to study company, just study the country. Now check it, move your eyes. One side I have written company, on the other side it's written country. Okay, who are the real owners of country? The real owners of countries are public, right? General public, right? And who are the real owners of company? They are shareholders. But then, who controls the country? Government controls the country. And who elects government? Public, right? Similarly, if we come to company, who controls the company? The board of directors. BODS means board of directors controls the company. And who elect the board of directors? The shareholders. So the structure of company is like country. So the structure of company is like country. Okay. So whenever you know you need to recall the limited company, you can do it through by with the help of country, the same system, right? Okay. So my dear students, we just discussed two types of sectors, the public sector and the private sector. Public sector organizations are owned and controlled by government. I've given you some examples, and they are basically a source of income for government. Okay. Secondly, the private sector organizations are owned and controlled by private individuals. Okay. And they exist in three forms. Number one, sole trader. Number two, partnership. And number three, limited company. Number three, limited company. Okay, right? Now I have a question. Just think over it. I'm sitting in front of you right now, and I have my institute, Mirchawala's Hub of Accountancy. Now tell me, where do I exist? Where do I exist? In private sector or public sector? I'm in private sector or public sector? Think over it. The answer is private sector. Yes, we are in private sector. We are in private sector. Okay, right? Have a look. Have a look. Now I'm going to discuss the definition of accounting with you guys. Definition of accounting with you guys. Now listen. There are two approaches of teaching this definition. The first definition I'll be teaching you is the Google definition, the official definition, which you need to reproduce if somebody asks you in the examination, or if somebody asks you in the interview. Then you need to write first four lines, then you need to write these first four lines. Okay. And then secondly, I have written one more line, one or one and a half more lines. These lines are just for your understanding. That's a layman definition. Okay. So the first of all is the official definition, the Google one, right? Which you will be giving, reproducing in the interview or in the exam. And the second one is the layman definition. Okay. Now listen, just assume, open your ears, open your eyes, and assume. Listen, let us say I'm the owner of my institute. Yes, I'm the owner of my institute, and today I went in the admin area of my institute, and I asked my manager. I asked, what's our total income this year? What's our total income this year? Listen. What's our total? You know what my manager started doing in front of me? Listen. He opens the receipt book and he start counting 1, 2, 5,000, 6,000. I just immediately asked. I asked I asked him immediately, "You're not doing accounting. You don't have any records. You didn't count it before." That means there were no counting. There were no counting. And when there is no counting, there is no accounting. When there is no counting, there is no accounting. If you can't count something, you cannot make report of that thing. Just use your brain. So they haven't counted yet. So I immediately understood that these guys have not done any accounting yet. Second question. Then I asked, what are our expenses this year? So what he did, he opened a file and he started calculating the electricity bill, telephone bill, the cleaning bill. I said, what is this? You didn't maintain any records. You didn't count it before. That means my admin was not doing any proper accounting. My admin was not doing any accounting, right? Okay. So now what is accounting? Just think about this example. And now read this. Now read this. What? Accounting. Accounting is the systematic process. Accounting is the systematic process. Accounting is the systematic process. It's basically a process, right? of number one, recording. The first thing is recording. The first thing is recording, right? Whenever a student comes to us, we record it that this guy has paid this much fees, this guy is taking this subject, this is the validity of that subject, this is the teacher. First of all, we need to record. The first thing is we need to record. Okay, the first objective of accounting is recording, right? Okay, now the second thing is summarizing. The objective of accountant is to summarize, or I would say, is to arrange information in such a way that it is understandable for the user. Giving you one very excellent example. Wait, let me move the screen. Later on with me you will be doing later on with me you will be studying profit and loss account. Right now we are not doing profit and loss account, but I'm just giving you an idea. Okay, and the one of the biggest objective of accounting is to calculate profit, because the owners are really very much interested in profit. Okay, now wait, let me write something and then I'll explain you. Now listen, what's my business? Just think. Can you see, all of you, please see at the screen? Let us say I buy this pen for $10. I buy this pen for $10 and I sell it for $15. Look at the screen. I buy this pen for $10 and I sell it for $15. So what is my profit? What is my profit, dear student? It's just $5. My profit is just $5 per unit. Okay, right? This is called gross profit. The difference between selling price and cost. Simple. I buy it for $10, I sell it for $15. So for example, I sold 10,000 units, 10,000 units of such units. And what is the per unit profit? $5. What is the per unit profit? $5. So my gross profit will be 5,000. My gross profit will be, wait, sorry. I sold 10,000 units, multiply by 5, it's 50,000. My gross profit will be 50,000. Very simple. So what is gross profit? The difference between cost and selling price. The difference between cost and selling price. I repeat, I buy pen for $10, I sell it for $15. The difference $5 is my gross profit. Okay, and what if I sell 10,000 units? So 10,000 units times $5 is equal to 50,000. This is my gross profit. But listen, all these activities are conducted in a shop, so I have to pay the rent of that shop. I have a split unit or air condition there. I have to pay AC bills. I have to pay cleaning bills. So this 50,000 is not my net profit. So I need to deduct some expenses. Let us say my expenses are 20,000. So finally, this 30,000 is your net profit. This is the net profit, or we can say take home profit. You can take home this net profit. Now, students, listen. This is all what we are doing in front of you. This is a basically accounting report. This is accounting report. So as a user, let us say you are the owner of this business. You are the owner of the business. So this information is really very summarized. See, there are two types of profit written in it: gross profit and net profit. So if you are interested in gross profit, you can go to gross profit. And this, what is gross profit? The difference between the selling price and cost. And if you are interested in net profit, then you have to deduct expenses. So it's a breakup. It's a big breakup. This thing is in summarized form. So the objective of one of the objective of accounting is summarizing. One of the objective of accounting is summarizing, right? right? So let me move to the definition. So accounting is basically a systematic process of recording, summarize. You can the information, the accountant puts information in a summarized way. Then the third thing is analyzing or interpreting. They are the close word. These are analyzing or interpreting. That means through accounting, the users or the owners comes to know where the business is going. Through accounting, the owners or the users come to know where the business is going. Now wait, let me give you a very good example. For example, listen. There is a company whose net profit is $1 million. There is a company whose net profit is $1 million. I just told you there is a net profit of 1 million. You said, oh, excellent, excellent. I said, wait, let me give you one more information. And what's the next information? Listen, I said, we earned this $1 million after doing investment of $100 million. That means we invested $100 million. And after investing $100 million, we got this $1 million. So the return is only multiplied by 100 is only 1%. That means we invested $100 million and we just got 1 million. That is 1%. 1% is the return. Now you'll say, oh, get out. This is not a good company. This is not a good company. Now your perception has changed. Now your perception has changed. So this is what accounting is. See the way now just you did accounting and you got the real performance. Now wait, what is the objective of this return percentage? Let me tell you. Let us say the interest rate offered by government is 8%. If you invest your funds in the bank, you get easily 8%. So this business is useless. Here you are investing in business, and business is always with risk. So with risk, you are just earning 1%. And if you invest in the bank fixed deposit account, you will get 8% without risk. So it's better you go to the bank. It's better you go to the bank. This business is not good. It's not giving you return more than interest rate even. The return is less than interest rate. So see, now you can interpret the performance. You can understand the performance through accounting. This is one of the objective of accounting. Now listen. And one more word is communicating. Yes, accountant are communicators. Accountant are communicators. Accountant are communicators. Communicators. Yes. What accountant does? Accountant prepares reports. He does all accounting and he communicate the performance to owners. He communicate the performance of business. He communicate the performance of business to owners. Communicate the performance of business to owners. So accountants are one of the best communicators. Yes, the objective of accounting is communicating. Now the next line is financial information. Financial what they communicate financial information to users or owners in the form of reports, example, profit and loss, or listen. Accounting is the systematic process of recording, summarizing, analyzing, interpreting, communicating what financial information to users or owners. Now you will ask one question, sir. We can understand, yes, that accountant owners are interested in accounting. We can understand, sir, owners are interested in accounting. Owners are interested Owners are interested in accounting. Owners are interested in accounting. But why you have written the word users? Sir, why you have written the word users? There is a question. Sir, why have you written this word users? What do you mean by users? Giving you one basic example. Example bank. For user, there is one example banks. Listen. Today you started a business and you injected some funds from your home. You injected some like $100,000 from your home. Okay. But you need more funds. You need more funds to grow your business. Okay. So after a year or so, you went to a bank and you asked for the loan. You applied for the loan. You went to a bank and you applied for a loan. Okay. Now listen, whenever we go to bank for loan, for taking loan, you know what bank asks? They say, show me your cash flows, show me your cash flows, show me your accounts, we need to see your performance. Will you be able to give back us our loan or not? Will you be able to return back our loan or not? We need to verify this. So banks also ask your accounts, right? Okay. So these accounts and these everything is used by the owner as as well as well as the users, example banks. Okay. And finally, in the form of reports, yes, in the form of reports, example profit and loss or other statements. You are kids right now, you don't know the names of many statements, but here I have written one word: profit and loss or other statements. Okay. So this is the official definition of accounting. Have a look please. This is the official definition of accounting. Now, next line, it is also said accounting is the language of business. Excellent, excellent. Accounting is the language of business. Accounting is the language of business. Listen, for example, I have to meet today, I need to meet a Chinese guy. And that Chinese guy just understands Chinese language, and I understand Hindi and English. I understand Hindi and English. Okay. So, will I be able to explain? Will I be able to understand that guy? The answer is no, because he knows just Chinese and I know English and Hindi. So, definitely, we need one interpreter who can explain us the language. Okay. So, just think, you can't understand a guy or a girl if you don't know his or her language. So just think, how will you understand a business without knowing accounting? Because accounting is the language of business. So if you need to understand accounting, you must if you need to understand business, you must know accounting. Giving you one practical example. Just open your mind, open your ears, open your mind. Be attentive, listen to me carefully. For example, right now I'm in the education industry. I'm an educationist. I'm in the education industry. Okay. So today I decided that I will enter in the donut industry. I will open a donut shop or something like that. Okay. So if I start a donut shop right from the zero, so maybe I get flop. I won't get any customers because I am super hit in education. People know me as an educationist. Last 20 years, 18 years, I have been in education industry. So my goodwill is related to education, not for donuts. Just think, you can study from me, yes, because you know I'm an educationist, but you can't buy donuts from me. You will buy donuts from Dunkin' Donuts, or you'll buy from Crispy and Creamy, or any other brand, any superhit brand. They are experts in donut. I'm just expert in education. So if I start donut business, you say, no, no, sir, we just want education from you. We won't buy donut from you. You will buy donut from somebody else. So if I start donut business from scratch, maybe I won't get a hit. I won't become hit. I won't be in profit. So the second option is, listen, I can buy a running business of donut, running business. For example, I just imagine, I meet the owner of Dunkin' Donuts and I said, I want your complete running business. I need your complete running business, including everything. So now, if I buy the running business of Dunkin' Donut, from the day one I'll get customers. From the day one I'll get all the customers and all the business, everything. So, do you think that owner will give me this business of Dunkin' Donut for free? No, he will ask a price. Let us say he asked me, just imagine it, he asked me $100 million. He said, yes, give me $100 million and I'll give you everything of my business. So now his asking price is $100 million. Now I have to take a decision. Should I give $100 million to the owner of Dunkin' Donuts for this business? So now I'll hire the expert accountants, and they will all calculate the worth of Dunkin' Donuts business. They will check the branches, the assets and everything. They will verify whether this $100 million is justifiable or not. So what they will do, they will do accounting, because the accountants knows the accounting, and accounting is the language of business. So if I need to understand the business of Dunkin' Donuts, I must know accounting. Okay. So this is a very famous quote: accounting is the language of business. Accounting is the language of business. Now, we are moving forward. Okay. The next name is elements of accounting. Elements of accounting. So these are the five elements: ALCER. Can you see the screen? ALCER, ulcer, ALCER. These are the elements on which the whole accounting business is based. Accounting building is based. Whole accounting building is based. Assets, liabilities, capital, expenses, and revenue. Okay. Let's start with the word assets. Okay. So these are the three line definitions. See, this is the first line, second, and third line. First of all, whenever somebody says assets in front of you, the next thing which will come in your mind is resource, resource, resource. Asset is equal to resource. Asset, come on, say it with me. Asset is equal to resource. Asset is equal to resource. Asset is equal to resource. So resources owned and controlled by the entity, resources owned and controlled by the entity, right? So for example, you can see my room, see this my room. There are many resources. These all are my assets. These resources are in my control. These resources, this cup is in my control, this phone is in my control, this pen is in my control, right? The first definition of asset is resources controlled by the entity. Number two, which gives future economic benefit. In easy words, the meaning of second line is which gives you benefit in future. Future economic benefit means you get some benefit from future from that asset. That's it. The third thing is which has a monetary value. Which has a monetary value, like it can be valued, it has a price, like it can be valued in dollars, pounds, or any currency. It can be valued in dollar, pounds, or any currency. So these are the three liner definition. Number one, resources, or all resources controlled by the entity, which gives future economic benefit, from which we get benefit, simple, and which has a monetary value. So now let me give you a few examples. The first example is, see the example, cash. Cash, the most favorite resource of all of us. The most favorite resource of all of us. For this we all are working. For this we all are working. Cash, yes, cash is an asset. Cash is a resource, yes. Because of cash we get future economic benefit. Obviously, you purchase anything from cash, and it has a monetary value. Yes, always it is written on cash. So the second is bank. You know, the cash which is present in your draw, in your till, the cash which is present in your draw, in your till, is your asset. And whatever cash is in your bank account, that's also your asset. Whatever cash is in your bank account, that's also your asset. Just think, if I have $1 million in my bank account, just think how the just imagine the way I'll walk. Just imagine the way I'll walk. 1 million, it's mine. $1 million. Just think. So bank is also your asset. Whatever present amount is present in your bank account is also your asset. Now, dear student, the third name is inventory. Inventory, we also call it goods. Inventory. Now let me show you some definitions. See the screen, see the screen. What are inventory? They are bought with the intention of resale. They are bought with the intention of resale. Example, Pepsi, Coke for supermarket. Yes, you know, whatever goods we buy for resale is inventory. For example, for supermarkets, Pepsi, Coke, right, biscuits, chips, these all are inventory which we buy for resale. Now the question is, sir, is this an asset? Yes, we buy inventory for $10 and we sell it for $12, so it gives you economic benefit. It gives you benefit. So yes, it's asset. Okay. And now, just for your information, in some books, the one other name of inventory is stock or goods. We also call stock or goods to inventory. Okay, right? So I have given you three names in cash, three examples: cash, bank, inventory. Now the next name is receivables. Next name is receivables. Receivables are also called debtors. Receivables are also called debtors. Receivables are also called debtors. What is this? When a business does credit sales, now listen. Whenever we sell something, students, please be active. Whenever we sell something, we have two options. Number one is cash sales. We can sell on cash, sell it and get the cash. Okay. And the second option is we can sell it on credit. We can sell it on credit. Credit sales means we give the goods to customer and we say, okay, pay us after a month, pay us after 2 months. Okay. So in that case, customer just gives us a promise. Customer just gives us a promise that he will pay. So that promise is a receivable for us. That promise is a receivable for us. And that receivable is also called debtor. So read it. When a business does credit sales, debtor or receivable is created. Debtor or receivable is created. It means right to receive cash. It means right. When you have a receivable in your book, that means you have right to receive cash. You have right to receive cash. Okay, right? Now, you as a student, you may ask, sir, is this receivable an asset? Yes. Why? Because when you have receivable in your books, you will get cash in future. You will get cash in future. That's an economic benefit. You will get benefit in future, cash. Please read it. Please read it. Have a look. Just have a look, please. Now the next name is machines. Yes, these are all our machines, the split units, okay, our computers, these all are our assets, right? They are resources. They are resources which are in our control. Yes, we get benefits from split units, tables, chairs, all. Building is your asset, furniture, cars, land. Land is also your asset. Okay, so these all are the examples of assets. These all are the examples of assets, students. These all are the examples of assets. Now, there are two types. There are two types of assets. There are two types of assets. Number one is current assets, and number two is non-current assets. There are two types of asset. Number one is current assets, and number two is non-current asset. Okay, let's start with current asset. We don't sleep, students strictly don't sleep. Look at me carefully. The first word is current asset, and the second word is non-current asset. First, let's discuss current asset. What is current asset? The first line, see the first line. See the first line. It is written cash or bank. Cash or bank. Listen, whatever cash is in your pocket, is in your drawer, that's your current asset. And whatever cash is present in your bank account, whatever cash is present in your bank account, that's also your current asset. Whatever cash is present in your bank account, that's also your current asset. Okay. So the first definition is cash or bank is current asset. Okay. Now the second very interesting definition. Don't sleep, which is realizable. Forget about the word realizable. First, read the word convertible, which is convertible into cash within 12 months. First, read the word which is convertible into cash within 12 months. Don't read the word realizable, leave it. So, convertible into cash within 12 months means receivables. Receivables. Listen, whenever you do credit sales, whenever you do credit sales, there is a receivable which is created in your book. When you do credit sales, receivable is created in your book. Okay, and we all know receivable is your asset. Now let me prove that receivable is current asset. How? In every market there is a norm, there is a culture of credit. Just like, for example, there is a market in which only 1 month credit, somewhere we see 2 months credit, or maximum there are 3 months credit. So whenever we do credit sales, we create a receivable, and that receivable is normally converted within 12 months into cash. 3 months, 2 months, 1 month, like this. So that means receivable is an asset which is convertible into cash within 12 months. That's why it is current asset. Okay, so I repeat the definition of current asset. The cash is current asset. Whatever money is present in your bank account is your current asset. Then the third, convertible. Forget about the word realizable. Convertible into cash within 12 months. Convertible into cash within 12 months. Convertible into cash within 12 months. Convertible into cash within 12 months, right? Okay. The example is receivable. Now, there is one more word, realizable into cash, realizable within 12 months. What do you mean by realizable? Realizable means the asset from which we get benefit within 12 months, the asset which we consume within 12 months. Realizable means the asset which we eat, the asset which we consumes within 12 months. So the example of this is prepayment. The example of this is prepayment. Now, as a student, you will say, sir, what is this new word? What is this new word prepayment? Let me show you. Let me show you. See this. I have written the example. I have written the definition. See, what is prepayment? The definition: expenses which have been paid. Open your eyes, see the screen. Expenses which have been paid but not yet utilized are called prepayments. Expenses which have been paid but not yet utilized are called prepayment, means advance payments. Listen, what is the example? You know, there are prepaid mobile phone cards, prepaid mobile phone. You pay for the mobile phone sim, you pay for the connection, and then you call, so it's prepayment. Second example, advance rent. Normally everywhere in the world, in the letting business, you give advance rent to the landlord. You give advance rent to the landlord and then you use it, right? Third and the best example, you are teaching. Normally students pay advance fee. Normally students pay advance fee. Listen to me. Normally students pay advance fee to teachers. So it's basically prepayment as well, right? So first of all, you will say, sir, is prepayment an asset? Is prepayment an asset? Yes, it's an asset. Why? because whenever you do prepayment, you get economic benefit in future. You buy advance connection, in future when you get do calls, you get benefit. You pay advance fees to teacher, you pay advance fee to teacher. Then if you pay advance fee to teacher, obviously when you study in future, you get benefit. So prepayment is your asset. Prepayment is your asset, first of all. The second thing is prepayment is your current asset. Why? Because just think about these example. We realize, normally we consume and we realize this prepayment within 12 months. Normally we consume and we realize the prepayment within 12 months. We realize the prepayment within 12 months. We realize the prepayment within 12 months, right? Okay. Now, bought. So there are two definitions of current assets. There are two definitions of current asset. There are two definitions of current asset. Number one is cash, which is present in your pocket or in your drawer, in your till. That's current asset. Number two, assets which are convertible into cash within 12 months. Example, receivables. Assets which are realizable within 12 months. Example, prepayment. And now the last and very expensive definition, all assets which are bought with the intention of resale. All assets which are bought with the intention of resale, with the intention of resale. All assets which are bought with the intention of resale, with the intention of resale, are basically current assets. And what's the example of intentional resale? Inventory. Yes, inventory is always current asset. Inventory is always current asset because inventory is bought with the intention of resale. So these are the three lines of current assets. The first thing, cash is current asset. Whatever cash is present in your drawer, in your pocket, it's current asset. Whatever cash is present in your bank account, it's current asset. Number two, all assets which are convertible into cash within 12 months is also current asset. All assets which are realizable into cash, which are realizable within 12 months, example, prepayments. And whatever asset you buy for resale is always current asset. And the best example is inventory. That is inventory. Okay. So giving you 1 minute, giving you 1 minute to read it, please. Now, the next definition is non-current asset. The next definition is non-current asset or fixed asset. Non-current asset or fixed asset. Listen, the best definition of non-current asset. Let me give you the world's best definition of non-current asset, which is written in many IFRS books. Listen it. Listen. Whatever asset which does not meet, whatever asset which does not meet the definition of current asset is a non-current asset. An asset which does not meet the definition of current asset is a non-current asset. Yes, that's the best definition. But as you are babies, as you are kids, so I have made some basic baby definition for you guys. But the best definition is just what which I just told you. Non-current asset are the asset bought with the intention of usage. Usage. See, here the intention is resale. In current asset, the intention was resale. Here, the intention is usage. Whatever non-current asset which you buy for usage, whatever asset which you buy for, which you buy with the intention of usage is non-current asset. And number two, which gives economic benefit for more than one accounting period. That means which gives you economic benefit for more than 12 months. Or in other words, which has a useful life, which has a useful life of more than 12 months, which has a useful life of more than 12 months, which has a useful life of more than 12 months. More than 12 months is a non-current asset, right? So there are two definitions: bought with the intention of usage, bought with the intention of usage, and which has a useful life or which gives economic benefit for more than 12 months. Now, all assets in my room right now, all assets, let me show you, all assets, see this, the shelf which you can see on the screen is non-current asset. I have bought for the usage purpose, I'm using it, and yes, it has a life of many years. Then see this, can you see the split unit? Can you see this split unit? Yes, I have bought, I'm using it, and I have bought it for usage, and it gives me economic benefit for more than one accounting period. Can you see the curtains? Can you see these curtains? See, I have bought it for usage and it has a life of many years, right? So these all are non-current asset. These all are non-current asset. Wait. Can you see this? Can you see this door? Can you see this sliding door? Can you see this sliding door? Yes, I have bought it for usage and it has a life for more than one accounting period. So all these are non-current assets. All these are non-current assets or fixed asset. All these are non-current assets or fixed asset, right? Okay, let me give you a few. I've written examples as well. Machines, yes, we buy machines for usage purpose. Cars, buildings, furniture, office equipments uh, like your fridge, split units, your computers, all these things are land. These all are non-current asset. These all are non-current asset or fixed asset. These all are non-current asset or fixed asset. These all are non-current asset or fixed assets, right? Okay, so the two definitions in front of you, current asset and non-current asset. Yes, the current asset definition is little bit bigger. Just you need to recall it 2 3 times. What is current asset? Cash or bank, current asset. Convertible into cash within 12 months or realizable within 12 months is current asset, or asset which is bought for resale like inventory is current asset. These are the definitions of current asset. And what is the best definition of non-current asset? Whatever, when an asset does not meet the definition of current asset, it's by default non-current asset. Or if you are a very kid, if you are a kid, then you should use the definition these: bought with the intention of usage, plus which gives economic benefit, plus which gives economic benefit for more than one accounting period, right? So majority assets in my room or in your room right now, it's non-current asset. Now, teaching you one very special thing. Listen, I just showed you a split unit in my room, right? So this split unit I have bought for usage. I'm using it, and I have bought it for usage purpose. For me, this split unit is a non-current asset. But just think, I bought it from a showroom. For that showroom, split unit is a current asset, because that showroom guy has many ACs, many split unit, and he buy it for resale. So for them, it's current asset, but for me, it's non-current asset. So the major thing is intention, because their intention is to resale and my intention is to use. I repeat, I give you one more example. Cars. Normally for us, car is a non-current asset or fixed asset. Car is a non-current asset or fixed asset. Car is a non-current asset or fixed asset, right? But for showroom guys, those who resell the cars, for them, car is inventory. Car is current asset. Car is current asset. So it's the same asset. It's same asset. For us, it's non-current asset. For them, the showroom guys, they have for its current asset, because of the intention. So don't forget about it. Okay, so what we discussed today, we discussed the two sectors, the public sector and private sector. What was the public sector? Owned and controlled by entities, owned and controlled by government. I gave you example, and it's a source of income for government. Private sector is owned and controlled by private individuals, and there are three forms: sole trader, partnership, limited company. Then, definition of accounting, we discussed that it's a systematic process of recording, summarizing, analyzing, interpreting, communicating financial information to users or owners in the form of reports, example profit and loss or other statement. Also I taught you accounting is the language of business, and I gave you the example of donut shop, right? Then we discussed the elements of accounting. There are five elements, and what is the mnemonic to learn? Ulcer, ALCER. See this, ALCER, and we just discussed the first name, assets. For today we just discuss assets, okay, right? And this is the definition of asset in front of you. And then we discuss two types of asset: current assets and non-current assets. Current assets and non-current assets, okay, right? So that's it for today's class, and I welcome you all to join my course. I have a big history, and many of my students are position holders worldwide and nationwide. So it's going excellent, and trust me, you will also enjoy a lot with our support, right? Okay, thank you and take care.